Hey everybody, it's Ryan Gibson. I'm really excited today to talk about self-storage. What's going on in the industry? What trends are out there? How we're using AI to really build operations? And I'm even going to talk about some markets that you should consider investing in, alongside some of the operational efficiencies that we're getting in today's market with some of the technology that we're implementing in self-storage. So there's never been a better time to invest in self-storage. If you want to learn more about it, check out the show.
Welcome to the Rental Property Owner and Real Estate Investor Podcast, brought to you by the Rental Property Owners Association, where real estate investors have found success since 1968. I'm your host, Brian Hamrick from Hamrick Investment Group. This episode is sponsored by Green Property Management, managing everything from single-family homes to apartment complexes in the West Michigan area. Find out more at greenpropertymgt.com. And RCB and Associates, helping real estate investors and small business owners navigate the complex world of health insurance and Medicare benefits at rcbassociatesllc.com. Hello and welcome to episode 555. How does someone go from being a commercial airline pilot to becoming one of the largest self-storage operators in the United States? My guest today is Ryan Gibson, co-founder and president of Spartan Investment Group, where he has organized over $1 billion in capital across more than 7 million square feet in 15 states. Spartan ranks as the 29th largest self-storage operator in the country. Today, we're talking about how he built it, what the aviation background taught him about risk and execution, and what it actually takes to scale a self-storage operation to that level. Ryan, welcome to the show.
Thanks, Brian. Great intro. And of course, you learn how to do everything like that in flight school, right? Of course, they teach you everything. So, how to run a real estate portfolio.
Talk a little bit about your background and your history as a pilot, a commercial airline pilot, and how that transitioned into being the 29th largest self-storage operator in the country.
I think the fact that both my co-founder and I, Scott Lewis, kind of come from backgrounds where there's a lot of discipline to what we do, right? There's discipline in following checklists and following procedures, or unfortunately, really bad things can happen for an Army vet or for someone in the military if procedures aren't followed. And then really good things happen when they are followed. Likewise, in aviation, same thing. The plane is well scripted to run off a great checklist, and then also have some kind of gut intuition on what to do when maybe a checklist isn't provided for a specific scenario. So I think that really lays a good foundation for what you do. But I think just finding the right people, I always say, knowledge, people, action is my mantra. Finding the knowledge about how to run real estate, by listening to your podcast, by, going to conferences, by learning as much as you can, talking to operators, not being afraid to kind of listen and understand all the time. I mean, Scott and I are always learning from other operators, even though we're the 29th largest. There's 28 other ones that are larger, right? And there's people that might even have groups that are smaller, but have done things exceptionally well. So I would say, just always keeping your learning hat on and getting good mentors, and then just finding the right people, right? I mean, people really make this business amazing. And I think you kind of know that if you know it, if you've been into a space where your leaders or the people that are associated with your organization can really drive a lot of success and results. And then you just have to do it, right? I mean, you can go to, 500 conferences and listen to 1,000 podcasts, but if you don't actually try to do something and take it on your own. And the analogy I give is, in flying, you fly a lot with an instructor, right? You go up, you get your training, you always have an instructor sitting right there, right? So, it's kind of fun because when you actually fly solo for the first time, it's something you've done over and over and over again, but there was been a person sitting there alongside of you every time to sort of guide you. And when you go do it on your own, the first time, you actually learn a lot.
Going back to your experience as a pilot and having those checklists, and to make sure that if you're set, so that things don't go wrong. But then every now and then something does go wrong. So I'm wondering if you can share an example of, like, as a pilot, when something went wrong despite your best efforts, and correlate that to the self-storage industry and the business that you built.
I think everybody, kind of functionally knows an airplane is going to fly, right? I mean, it's aerodynamic and it's got engines and everything is supposed to go in a certain way. And I think we, as pilots, we always train every 9 months. We have to go through specific training where the plane flies, but then it loses an engine or hydraulics, or it has some kind of aileron or flight control failure. And then there's a checklist prescribed to go through and do it. I think with real estate, it's very similar, right? Real estate is supposed to make money and perform and cash flow and have tenants. And I think you have to be ready for all of those things to go wrong. And the best saying I like is, if it can go wrong, it probably will. So, you sit through lectures about having insurance and knowing, how to legally protect your assets and how to prevent lawsuits and things like that. All those things will happen. I have over 50,000 units at this point. And, so now you have 50,000 customers transacting on your properties. Like, something is going to happen. So you just have to be ready for it. And so I think an example would be something like interest rate environment, right? We had interest rate rates that were low, and then we had interest rates spike to 5.5% over a course of a couple of years. And, that created a lot of pain in real estate. And so, things to mitigate that are like fixed rate debt, which we had on our portfolio, or not leveraging too much. When you're a pilot, you can leverage too much as a pilot. Maybe you go to the airport and you're not feeling that great. Or maybe you're flying an airplane you don't have that much experience in. Or maybe you skip a checklist, or you just didn't have breakfast that morning. And then you're kind of rushing. And then the gate agent wants you to do something that, wait for some passengers or delay the flight a little bit more. Or maybe the weather minimums, and all those things sort of line up, and then you have an accident, right? You already have a problem, right? And so we call that the Swiss cheese model, right? Where if you imagine a bunch of pieces of cheese and all the holes line up perfectly, and you can get through all the holes, you have an accident. And so an accident doesn't happen for one reason. You don't just have an airline crash for one reason, right? You have a series of events. Anybody who's seen an aviation show has probably saw that, right? Where it's like, this happened, and this happened, and this happened, and this happened, and then it was a problem. Real estate's the same way, right? You go buy property and you over leverage it, and you take floating rate debt, and you're an inexperienced operator, or you put the wrong people there, right? It's not just the interest rate that took away your property. It's probably a bunch of problems that stacked really high. And all that Swiss cheese model lines up, and boom, you have a problem. You lose the property, or you have a catastrophic failure. I think as real estate operators, we have to be the people that stop and say, hey, you know what? I'm not feeling comfortable. This is not a deal, right? We do it as pilots as well. They always encourage us. We call it setting the parking brake, right? So if it's just becoming too much, or we're just not feeling good, we can just stop the airplane, set the parking brake before we take off, right? And we can say, you know what? I just don't feel good about this. Let's go back to the gate and get it checked out. And that's what prevents accidents. And I think the same in real estate, right? It's just like, we have an investment committee at Spartan. It's me and Scott and a couple other people. And we look at every deal and we scrutinize it, and we say, you know what, we're just not feeling good about this one because there's too many things, right? Too many knife cuts in a deal. And one thing I like to just kind of tell people to take away from this is, if you're looking at a deal, if you're doing a lot of math to make it make sense, it's probably not a deal, right? So if you're looking at a deal and you can't quickly just sort of eyeball it up to being what you want, it's probably not a deal. Now, of course, if it passes, you can kind of get into the numbers or whatever, but yeah, that's what I'd like to compare it to. I think that Swiss cheese model has been a big saver for us.
What are some of the other brake items that you have? Like just hard coded, like that we're going to park it now, and what else does that apply to when you're looking at a self-storage deal?
I would say demand is the biggest thing that's going to crush you. If you have a oversupplied 3-mile or 5-mile market surrounding your property, there's no way out of that. That's like a heavy airplane on a hot day getting slow on airspeed. You're just never going to recover. And so I think a market study to prove your business plan is going to work is massively important. Like there's no saving that. If everybody's got vacancy in a market, there's nothing special about your property, and don't convince yourself that there is. You're selling a box with some corrugated steel and some air. Customers, unless you're running a junkyard of a property, customers are going to choose on price. And if there's a lot of inventory and not a lot of occupancy, you're going to lose your thing. But I would say for any real estate deal, leverage. I always look at deals and say if the deal is leveraged over 70%, you've got to get into the 20% on returns, mid 20s. If the deal is leveraged 50%, mid teens are acceptable. If the deal has no leverage, high single digits are acceptable for the equity side on a deal because you don't have as much leverage. Fixed rate debt, obviously we've learned that, but then you just got to really get into the underlying fundamentals of that market. Is it difficult to build another self-storage there? Or is it really easy, right? So you may have no supply in that market when you show up, but is it really easy to a bunch of people have permits pulled in the area? I actually like to, people always ask me like, oh, have you checked out Austin as a market? Elon is building all these things, to the east, and it'd be great. And I actually like to shy away from that stuff. And I know it's a little contrarian, but because everybody knows about that. That's not a secret. It's not a secret that Tesla is and SpaceX and all these things. So what people usually do is they go over there and they overbuild and they put stuff up before it comes, and it's all the buzz, right? And Austin was a very oversupplied market for a long time for self-storage. It might be on the recovery side, but it was very oversupplied because everybody heard the same sound bites. So I like to kind of look for markets that maybe are lesser talked about, but still have that underlying, 2% or 3% population growth that have a good, strong demand.
What are some of those markets that you're in that, you don't mind sharing with us?
There's some markets like, Nebraska. We've checked in Lincoln, and there's been some, and the fundamentals are there, and people are just kind of, REITs aren't there. We went to Northwest Arkansas years ago now, and no REITs were there at the time that we were there. We actually partnered with Extra Space and have them be, they're a property manager there for 4 of our sites. It's a great market. I mean, the population growth is growing. We've seen markets like South Carolina, outside of Hilton Head, a little less talked about, but just there's resort towns. Some coastal markets in Georgia have been just great little boom towns. I mean, they have population growth that isn't really well known about. It's just like affordability and people wanting to move south for retirement. And then we've seen a lot of good population growth around, or good demand around military bases and universities. So I'd say those are some markets that you're just kind of like, you don't really think of that market. Like you don't really, Northwest Arkansas, like what's that? But when you go there and you actually, type the city of Bentonville in for population growth, you're going to see some pretty impressive statistics, and it's still affordable. So people are really driving to that affordability, and that's going to bring up a market quite a bit.
I'd like to take a moment to tell you about Green Property Management. Not only do they manage everything from single-family homes to apartment complexes in the West Michigan area, they also manage my entire portfolio. So I can tell you from personal experience that their unique flat fee management style is worth a closer look. If you feel that your property isn't operating to its fullest potential, then Green Property Management can help you take a holistic approach that will save you money, eliminate your headaches, and increase your net income. And if you're a property manager interested in applying Green Property Management's model, give them a call at 1-866-95-GREEN or visit them on the web at greenpropertymgt.com. If you're thinking of leaving your W-2 job and becoming a full-time real estate investor, one of the greatest costs you must consider is healthcare for you and your family. When I made this transition myself, I found the whole healthcare insurance process to be confusing and frustrating. That's why I'm glad I met Chad Creasy at RCB and Associates. Chad is a professional health insurance agent who helps real estate investors and small business owners understand and choose their best healthcare options. And best of all, his services are covered by the insurance company and won't cost you a dime. If you live in Michigan and are expecting a change in your healthcare insurance coverage for any reason, or losing employer coverage or transitioning into Medicare, then you owe it to yourself to contact Chad Creasy at rcbassociatesllc.com. Go back to just when you were an airline pilot and just, thinking about getting into self-storage. I mean, what was it that made you even think about that? Why self-storage? And then what was that transition like?
First of all, I did what everybody thought they should do, right? So when I was an airline pilot, I wanted passive income and I wanted exposure to real estate. And so I kind of fell in love with real estate and the idea that you could have this hard asset that produced income. And I thought this is great, right? So as an airline pilot, I thought I'm going to go do what everybody does, which is I'm going to go out and buy a bunch of single family homes, right? And rent them out. And nothing wrong with that, but I was terrible at that. I was really bad. I didn't have the patience for all the little micro nuances that go into running a single family home, like the repairs, the management of the property manager. There's a lot of little things, right? And I just didn't like it. I wanted to have a rental property basically in all my layovers so I could do it while I was in my layover, so I didn't have it detract from any time away from my family when I was actually home from work. So I started building a rental portfolio, and I realized the ROI of my life was very low. Even though the returns were great, my ROI of my life was low because I was just spending a lot of time in it. At the same time, I was renovating my house, and I had to move my stuff and put it into a self-storage unit. I didn't know anything about self-storage. I thought the whole thing was kind of silly, to be honest. So I moved my stuff into the self-storage unit, and it's in there for a couple of months. I thought my renovation of my home was going to take, 3 to 5 months. Surprise, surprise. It took like a year and a half. And my stuff stayed in the storage unit. And about 6 months into it, the landlord raised my rent 20%. So it went from $100 to $120. And I kind of got a little irritated about that. So I looked around, and everybody else was full. And I, got to talk to the owner, and he's like, yeah, I have 500 units, and we pop the rents after 6 months, 20%. No one moves out. The market's great. It's full. And and then I'm doing the math. I'm like, okay, 20% rent bump on 500 units is a lot of money. I mean, that's $10,000 a month. And I'm like, this is pretty cool. So, or I'm sorry, 1,000. But, and he said, yeah, people hardly ever move out. And so, then when I went back to that storage unit, I opened up the door, and I was like, I would have been better off just getting rid of this stuff, because this stuff wasn't worth the rent that I paid for, a year and a half. And it just got me fascinated with the industry. And I looked up who the big players were. I looked up who had been successful in the industry, like who was really making the money. And I realized that 70% of these things were owned by mom and pop owners, individuals that owned one or two. And 10% of the market was owned by Public Storage, Extra Space, and CubeSmart. And I thought, okay, those are the big conglomerates, right? I was like, well, who are all these other people in the middle? And I'm like, there is a bunch of middle fish market players like Simply Self Storage, Life Storage, SureGuard, and they were buying up the mom and pops and basically aggregating like massive amounts of these properties. And then they were selling them for a huge gain to these publicly traded REITs, the Public Storage, Extra Space, and CubeSmart. And I thought, I want to do self-storage, and I want to be the fish in the middle. I want to be going and buying up all the mom and pops, and then eventually setting myself up for a really nice recapitalization or sale to a big institution. And so that's what we did. And then we just kind of studied how those middle tier operators did it. We said, okay, these guys they have a sophisticated brand. They have a really good strategic operation, strategy to how they operate them or where they buy them. They have defined criteria. And then we just started buying stuff that the REITs are interested in. And that's really been a great strategy so far for us.
Have you been selling to the REITs then, or are you still in the process of buying up and packaging it and getting it ready for sale?
A little bit of both. There's some properties that we just don't fit with our strategy. We've sold to institutional buyers. Some of our properties that don't fit with our strategy have been sold to mom and pops, actually. The other way around, we'll have someone with a 1031 exchange, and they're kind of willing to overpay a little bit because that property's in their market and they have an exchange due in the coming months. So, it's a little bit of both, but we're definitely in the build mode. We have 90 stores right now, like you said earlier on the intro, about a billion in AUM. And so we want to see that grow to about 300 stores. And then we have some really nice assets that we've just refinanced, and we send our investors all their money back, and they continue to benefit in cash flow without paying the taxes, which has been a really great strategy for us. We're actually getting ready to, we did that to 5 properties last year, and we're getting ready to do it to a 6th one here in the coming month. So, I think now we're kind of seeing like we're in markets that don't have much competition or any major population or any major like self-storages coming online that would conflict with ours. And our assets are the best quality in that market. So we're just kind of holding and, eventually going to recap the portfolio in time. So I'd say a mix of both. We're kind of selling the stuff that makes sense to prune, and we're keeping the stuff to keep growing our portfolio up.
As you build this portfolio and learn how the previous operators were operating, you must have developed some best practices along the way. And I'm wondering, like, how do your systems differentiate themselves from the bigger players? Like, what are you doing that other people and other groups are not?
I'd say the number one secret sauce that we have is we have a system that allows you to book units in the office without a person there, but it's a massive screen. It's like a think of like an iPhone, 10 times the size of your iPhone. When you walk in, we can open and close our office remotely. You can book units on our virtual manager kiosk. It's a real person on there and it shows up on the screen. You can book units that way. That enables our store manager to be out on the property or sick that day or not, sometimes unman the property. And this is a big deal because we can actually disperse our call center into our portfolio with store managers. So when you think about an East Coast store has a manager that shows up and is running this virtual manager system from their office, they can run 5 sites with the staffing and the volume that they get. So they're running 5 stores. And so we have our virtual manager team that's dispersed throughout our entire portfolio. So an East Coast store that opens can open us a West Coast store at 6 in the morning or 5 in the morning, which is a huge differentiator because the offices usually don't open till like 9, right? And so you're driving into work, you can see the open sign, we can open the office. And then likewise, the West Coast operation can keep the East Coast offices open longer as well. So that customer that desires an interaction can get one still. And it doesn't cost us any more on the payroll side to do that. And then I would just say, a lot of our operations is just integrated, so we don't have to staff as heavy. If you're an operator and you're just buying one property across the country, you're going to have to staff that pretty well because you're not going to have anybody there to go check up on it, and it's really hard to find somebody to do it part-time. It's just not practical. You're not going to find somebody reliable that wants to work 15 hours a week. They're going to be either, in retirement mode or non-existent or distracted with whatever else they're doing with the other, 25 hours they work in the week. So yeah, I'd say that's probably a big part of what we do. And then I would just say culture. Culture has been a huge part of just the team and the dynamics within our company have really driven a lot of results as well.
If I'm hearing you correctly about the way you're staffing your facilities, you can have remote managers who, when someone walks into the office, they can interface with them on a screen, which is very interesting. I'd love to know, what data do you have about that? Like the effectiveness of that versus just having everything be online. Like they can go online and book a unit and then use a gate code to get in and do their thing.
65% of them are booking through the store on the screen. And then I would say probably less than 10% now are face-to-face. And then everything else is online or call ahead. Yeah, most people call ahead because it's, and so we kind of count that, we kind of double count that 65% a little bit because, if you call ahead, the person who's on the screen is actually the person who's answering. Like that customer service team is the same team answering. But we get a lot of bookings before people even go to the store. I still think you have that cross segment of your customer base that wants to go in and have somebody to talk to. That's still very important. You're not going to get rid of that in the next decade, at least. People want to talk to people and they want to know someone's there, keeping an eye on the place. But that's what the manager's for, right? And I think what we've learned is it's hard to find a store manager to run your $10 million property that knows sales, customer service, maintenance, is willing to clean and roll up their sleeves and run a whole property. It's hard to find that person. So we've taken the sales side kind of out of it a little bit, right? Because the customer service team is really geared up for that. So it's almost like we want them to book units, but we almost don't want them to because it's just, hey, go take care of the property and manage what the customer needs that way versus worrying about booking the next unit or answering the phone or getting distracted with that. So
what does your call center look like? Is this your own in-house call center or are you using third party? And how do you run that so that it's as effective as possible?
That's probably another strategy is we went to AI. So AI is completely running our after hours call center. So if you call from, call it 7 p.m. till midnight, you're going to, or really all around the clock, you're going to get AI. Very scary how good it is.
Like voice AI, like you can actually talk to AI on the phone.
Yeah, like voice AI, and it is dialed. I mean, it sounds like a person. I mean, you can kind of tell it's AI, but it's not. It will give you exactly what you're looking for, which is great. And then during the day, the call center is, like I said, it's the stories team that's, the virtual manager team that's dispersed throughout the portfolio. So it's just store managers who are going, and if they, someone calls in and they can't answer, it just automatically rolls to the next person who's available on the team. So it's a pretty smart system overall.
The AI voice that people are interfacing with on the phone. Is that something you developed in-house, or are you using a third-party service for that?
Third-party system that we provide, actually our virtual manager kiosk system, that company has developed it and it's really good. So you could do your own, and I'm sure there's ways to do that through like ChatGPT. They're starting to do some voice stuff, but we just use the existing software that we have there with the stories team.
How effective is the AI voice? I mean, have you noticed that it's more effective than a person after hours or less effective? What kind of data do you have?
I don't have numbers, but I would say that it's just as effective, because most people that are calling in are asking about a payment or changing a card or availability, basic questions. And, we had our own call center actually offshore in the Philippines that we managed in-house, and they did a great job. But I would say the AI is doing just as well, at servicing the customers.
What other systems do you have in place that you feel really make a difference as far as, increasing income?
We have our own tenant insurance company. So we have our own tenant insurance captive. And so I think a lesser known thing about self-storage is, yes, rental income is your number one source of revenue, but behind that, second to that, is tenant insurance. So we actually sell tenant insurance to the customer. So when you walk in, we sell them a $15 a month plan. Everybody has to have insurance. They don't have to take our insurance. That's not legally required. But you have to have insurance. You have to show evidence of coverage. And so with our own tenant insurance company, we're able to actually take a pretty large percentage of the income that we generate from the tenant insurance. And so, usually at least a 50-50 split, but we've got it much higher because we have our own insurance company to do that, which is a huge game changer. I mean, it changes the cash flow considerably. I mean, think about it, 500 units at, $15 plans. When we take over a property, it adds tremendously to the NOI cap rate valuation, on a property. I mean, we're increasing sometimes income by $70,000 or $80,000 a year on takeover just from the tenant insurance. When you divide that by a 6 cap, I mean, you're talking 1 point something million, 1.2, 1.3 million. So that's a big game changer. And I think that's probably something that we have in place. And then the other thing too is we use AI lean for our auction process. Everybody always asks the question, is this like Storage Wars? And the answer is, yeah, kind of, it is, except it's all done online. So if a customer doesn't pay, we're able to get them out of a unit within 30 days or 45 days, depending on the state, through the auction process. And we have that all automated as well with a third-party vendor.
What about other upsells? Do you do anything like having U-Haul trucks on site or boxes or anything like that?
I'm going to bust that myth. I mean, that is not worth it. It's kind of interesting. Like, we used to have tons of U-Hauls, and it's definitely a thing. And, people say, well, if the U-Hauls, will attract a customer because it's convenient and all that. And that's true. But at the end of the day, the trucks are a pain to run. I mean, it's a revenue share with the U-Haul company, and that revenue share has declined over the years because they're putting them everywhere. They're at gas station parking lots, they're, and lay down yards, they're all over the place. So you're losing revenue, and then you gotta staff it, right? So you gotta have somebody there all the time to manage the keys, clean the trucks out, turn the trucks. And, when we kind of looked at the labor to revenue spend on the U-Haul management, that's just not there. And so we've cut U-Haul out of a lot of our stores. And I would say, but cell phone towers are great things that we've done. We've got on the registry to have a cell phone tower on every property. We don't have one on every property, but we're on the registry for everyone so that everybody kind of knows, like, hey, if you wanted to put one here, you could. And so we've gotten some good triple net leases from the cell phone towers, which makes a great source of income as well.
I didn't realize you could put yourself on a list that for the cell phone tower people to come find you. I just thought they would come to you and say, hey, we'd like to put a cell phone tower here.
No, there's a registry. Yeah, it's like American Cell Phone Towers or something. There's a link online. I'm sure if you just Google search it or something, there's a way to actually kind of put your flag in the ground and say it. Again, there's a low likelihood that they haven't already, kind of to your point, found that, hey, we need to put one here, and, here's a self-storage property. We can mount one on the roof of the building, which, you see them all the time that way. But yeah, you can add them that way as well.
Tell our listeners how they can find out more about you, Spartan Investment. Feel free to plug whatever you'd like.
We do offer kind of, partnerships where people can own a storage with us. And if you wanted more information about that, you can go to our website, spartan-investors.com. Likewise, you can email me, ryan@spartan-investors.com. And I'm on LinkedIn and all that. Yeah, happy to connect.
How have you personally used AI in the past 24 hours?
Claude Cowork has kind of taken over as probably the number one AI generator out there. And so we actually have an AI expert that we've hired. And so we have a data warehouse at Spartan. So all of our property management, revenue, all of our bookkeeping and financials are all connected. And so it's now connected into our Claude workspace. And so one thing that I've been pretty proud of is, we have about 50 different syndications across, different sets of investors, right? And so every month I write them a newsletter, let them know how their property is doing. And we've got Claude wired up to look at the financials, look at the property management software, ask me 8 clarifying questions that only I kind of know, like changes and refinances and things like that. And it will write all of our updates. And they are Wall Street investment banker worthy. I mean, they are really good. They make the financials, they comment on the financials, and they can look into occupancy gains and price per square foot. It is game changing, because I used to probably spend about 80 hours a month on that. Just going through the financials, going through the books. Now it tells me what's going on, and I read the update as I would want to see as an investor, but also as an owner. And I think that is game changing. It's truly incredible time to be living in.
Half your month was spent writing investor updates on your 50 different syndications. How much time do you spend on it now?
Well, it's interesting. This month is our launch month for it. I have a series of meetings this week to kind of tie it up, but I would probably say it's going to cut that down to about maybe 7 hours, because you still have to, go through each one. That's going to take some time, but you're just not writing it anymore. And frankly, the investors are going to get better information, because now that you can really democratize data, you can just give them everything. Give them it. I mean, I couldn't commit to giving them everything. I mean, like everything down to the unit type, occupant, everything, because it takes forever, and it's hard to scale, that kind of resourcing into providing that much information, and then QC it and make sure it's accurate. So now, I'm excited to share more information with people, because I can. It's a mouse click.
You're doing monthly?
We do monthly. Yeah, we do distributions.
That's a lot. But I mean, I do quarterly updates, and it takes up so much time. But you're right. I've switched over to having AI. Claude, I use a combination of Claude and ChatGPT. And it's just better. It's more comprehensive, and it helps me convey the complex topics in a very simple way.
My last newsletter was really great. I had just done a presentation on storage to a closed group of investors that have put a lot of money with us. And I literally said, okay, I'm going to write the newsletter this month. I uploaded my slide deck and said, hey, and I gave it a prompt, nice 400-word prompt, and hit enter, and it wrote the newsletter. And I had people email me back saying, that was the best newsletter you've ever written. And I was like, all right. I was like, thanks.
It's okay for you to take credit. That's awesome.
Yeah, it's been great.
Brian, thanks for coming on the show today. It's been a pleasure talking with you about Spartan investment and just your arc from being a airline pilot to becoming, the owner and co-founder of one of the biggest self-storage groups in the country. So thank you so much for sharing your just insight and your best practices. It's been a real pleasure.
Likewise. Thanks, Brian.
I want to thank everybody for listening to this episode. I'm your host, Brian Hamrick from Hamrick Investment Group, and you can find out more about me by going to higinvestor.com. That's higinvestor.com. This episode was sponsored by Green Property Management, managing everything from single-family homes to apartment complexes in the West Michigan area. Find out more at greenpropertymgt.com. And RCB and Associates, helping real estate investors and small business owners navigate the complex world of health insurance and Medicare benefits at rcbassociatesllc.com.
You've been listening to the Rental Property Owner and Real Estate Investor Podcast, brought to you by the Rental Property Owner Association. You can find out more at rpoaonline.org. If you enjoyed this podcast, please go to iTunes to subscribe, rate, and review.